This is silver on the daily scale priced in US dollars. The reaction in silver this past week in reference, yes, relatively speaking, to the reaction that we have seen in the Australian dollar US dollar and the surge that we have seen in the dollar index, this reaction is actually fairly muted. It came down, but also the manner in which it came down so far appears to be conforming to the idea that that could be corrective and possibly part of a fourth wave. The wave count right from the bottom has been so far, in my opinion, best taken as 1, 2, 1, 2, 3, 4, 3. So that could be a fourth wave. And as you can see, it hasn't really given back a lot of the gains so far. And it is battling various important lines and levels, as I've emphasized in previous videos. First of all, you see the overhead resistance here. You can't miss it. It's an absolutely solid roof right here, and you can't make it, of course. It needs more work. It needs more time to consolidate here before it can attempt a CS breakout. That's the first thing. Now, if that's not enough, it is combined with a line coming down, and this is also pushing it down. And we have this line, the black line that I emphasized last week when we looked at the long term. You can see that it's battling to regain the support of this line. So this is a process that could go on for several weeks. It should not surprise you one bit. This is perfectly normal. Perfectly normal. In fact, it is so far, in my opinion, indicating that there is strength inherent in the price action, the performance here. I would say that we are seeing weakness, and I don't expect if it does manage to break under this level. Okay, if it breaks under this level that comes at 1520, okay, if it breaks through that and it stays down, then I would say this is weakness that I would not associate with a possible fourth wave forming here. Okay, but as long as it stays in this zone between 1619 and 1520 or so, it bounces up and down here, especially if it gives us a whole series of ABC patterns. Let's jump to the 60 minutes. I would suggest that there is at least one possible reading here. I won't really insist on a particular pattern because there are quite a lot of possibilities here. But imagine that could be, for example, 1, 2, that's your third wave, that's your fourth, that's your fifth. Okay, so that's your first leg, and that would conform to what we have seen in the case of gold. You'll see in a few minutes. So that could be corrective to this. So if you get, for example, now a nice triangle, yes, a nice triangle forming here, that will be very helpful. Very helpful. It will be quite indicative, first of all, that it's quite likely to go down, but it is also equally likely to come back, because the pattern here of a triangle would tell us that this is a formation of an ABC. And as I said, for now, I don't see the decline here as ominous, as suggestive of further huge decline in silver. No, I think this is fairly well contained. It's just a measured reaction to the overall difficulties that silver is facing at this particular juncture. Okay, that's gold, that's the daily, and again I can refer the price action here in the past week, relatively speaking, to the price action that we have seen in related markets like the Australian dollar, US dollar, like the dollar index, and you can see that the decline there and the rise in the dollar index, the performance there was much more dynamic, much more, if you like, extreme than what we have seen here. This is relatively well contained decline, and moreover, it appears to me that it could be indeed going in the direction of forming here a triangle, of which we may have already seen the A leg. It's forming now the B leg, and I'm looking for that C leg. The best thing that could happen to the longs, and as I explained yesterday, and I think the day before, I told you the best thing that could happen is if we get a triangle right here. And I'll go to the 60 minutes, you'll see exactly what I mean. The pattern that I'm working with is taking this as a 1, 2, 1, 2, 3, 4, 3 3-4. Okay, but even if the 3-4 is wrong, but you do get a triangle coming up here, that will still be very bullish. It might suggest that I have to subdivide the upsloping advance here differently, but the very fact of having an ABC here that could be clearly identified in the case that you have a B triangle, that in itself would be very bullish. Okay, remember, when you get a triangle after 5 waves, the market is hinting that it is forming an ABC, and that's exactly what I had in mind when I shared with you this idea. I think it was yesterday. Take a look. We came down on the 60 minutes in what could be taken as a perfect 1, 2, 3, 4, 5, no problem. Okay, so that's U1. We don't have parallelism. Yeah, it doesn't touch the line here. That's U1, 2, 1, 2, 3, 4, 3. That's an A, B, C, D, E, and then plunge. That's fifth leg. Okay, and then you A, B, C, if that's correct. And I think that we had clearly a B around here. We do need further choppiness here. We need further choppiness. We need quiet market just going sideways, forming perfect triangle. And that will be perfect for us, for the bulls, because even if afterwards it will decline, and it is likely to decline, that will become inevitably your next critical level, very, very short term to watch. That's 1302. If we get this kind of price action, you must watch this level, because if it goes through that level, it's probably going lower, much lower. It's probably going towards 1280. But as I have just explained several times, this in itself would be bullish, even though it's going down. It will almost certainly indicate it's coming back. Okay, so that is interesting development here in gold. I want to show you the 15 minutes and why I'm reasonably confident that we had here a B. You can see the climb, and you can see the price action is almost certainly forming a B. That's what I have to say at this point concerning gold.